Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. We specialize in a very unique mathematical approach to the stock market where we calculate the market and individual stocks in three-dimensional space using some of our timing filters, and that typically yields to very accurate forecasts where we can forecast, once again, the stock market or individual stocks with great accuracy on long-term scale or even intraday scale at times. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. And this is a series of videos that we recently started that basically discuss our work, look at various stocks, which is what we're going to be doing today, and make certain projections into the future. I do encourage you to subscribe to our channel. We're going to be doing daily analysis of individual stocks, overall market, etc. If you do want to learn a little bit more about our work, I also included links in the description of this video that will take you into our calculations, proof, and take you down that rabbit hole, because I can actually talk about it for weeks without stop. And most people find it pretty boring, but I find it quite fascinating, because what we're dealing with here is actually predicting the future, not only in time, but when it applies to the stock market, also in price. So what we're going to be looking at today is Adobe Incorporation, and this is a perfect example of when we shouldn't do anything. So over the last couple of weeks, I've been talking about various stocks that are approaching their very important completion points, whether it's to the upside or the downside, and then we anticipate significant moves in the opposite directions. Well, today's stock is a perfect example of when we shouldn't do anything, because the stock is moving towards its completion point, but that completion point, as in case of Adobe, is next year. So let's take a look and see what it says. There's a lot of new subscribers and new people watching our videos, so for those who are not familiar, I'm just going to very quickly describe what we're looking at in terms of our analytical framework. So what you see here on the bottom are cycle composites. We call them cycle composites, and basically the bottom cycle composites are responsible for putting in bottoms, and the upper cycle composites are responsible for putting in tops. To make matters a little bit more complicated, there are typically multiple composites running for both the down cycles and the up cycles. So what you see on the chart here is only two iterations of them, but there are actually more, usually two or three running at the same time. But if you know how to put them together, you're going to get some, you're going to get something very similar to what we actually see on the two-dimensional time and price chart. Now the lines you see here, and this is probably a better representation, are our cycle clusters. And basically what we do is we scan the market, or scan the chart back, I should say, and we have a number of proprietary cycles that our system picks out from any given chart and then projects them into the future. And what we found over the years is that important turning points, or perhaps not important, it once again works the same on intraday, just the matter of looking at shorter time cycles. The important turning points occur when there's many cycles arriving at the same time. That's why we call them cycle clusters. So when there's a singular cycle arriving, maybe you'll get a turning point if everything else lines up, but most likely not. But when there's a 4, 5, 6, 7 or more cycles arriving at the same time, particularly strong longer-term cycles, it's pretty much assured that we're going to get a turning point right on that date. Okay, so that's what we're looking at here. So in this particular example, as you can see, if we look at cycle composites and cycle clusters, basically we're looking at this date, which is March of 2026. So what Adobe stock is doing now, it is moving into this particular low that is scheduled to arrive in, let's say, March. It says March 19th, but let's say March plus or minus 3 weeks of 2026. And then subsequently, this is where the interest comes in, of course. So we are not interested in the remainder of this move, because it moved down quite substantially already, and there's going to be a lot of interference as it tries to bottom, so we're not interested in Adobe at this point in time. But what we're interested in is this move. Once it bottoms with a major cycle bottom, then it's going to increase into a major cycle top, which is scheduled for November 13th of 2027. Once again, our system calculates all of those dates, all of those cycles, clusters, and it projects them into the future. That's why we're able to make these very accurate forecasts. So this is a perfect example, a perfect illustration of what not to invest in, because it's just going to frustrate you. It's not going to do very much either to the upside or the downside. You're just going to be stuck in this training range until this very important longer-term bottom arrives. It is at that time that we can calculate with precision exactly where that bottom is. By the way, it's going to be within this region. As you can see, these are one of our three-dimensional calculations that points into this area right here. If we want to be exact, it is $276.56, perhaps a little bit higher. So we have to wait until it bottoms. But once it bottoms, that's when it becomes very interesting, because the move to the upside is going to be quite significant and quite substantial and relatively fast. You know, we're talking about a year and a half, and the stock's going to appreciate, you know, at least 200% during that period of time. So the question becomes, well, where does the stock bottom, and how far is it going to go? And that applies to our three-dimensional calculations. Once again, very briefly, because the time is not yet right to make these calls. We have to wait until next year for this particular stock. But I kind of outlined for you what it's going to be. So we have this projection, let's say, into approximately $276, $250 a share. And then from then, that we can calculate what the next upper target is going to be. And that's what's so powerful and so advanced about our software. I'm not sure if there's anything remotely closely available to what we have, because once we can project this move already, because we know when the time variable will arrive, and we know with a certain degree of precision where the price variable is going to be, and that's the projection here. But from that projection, we can ascertain how far the move is going to be from that bottom in, let's say, March of 2026 to November of 2027. So this is the first iteration of the target. So let's say $250 to 200 and or looks like it's going to be, let me highlight this area. Looks like it's going to be between basically $800 plus or minus a few pennies, or a few dollars, I should say, to be more exact. But that's just the beginning. The darker green region here essentially means that the probability of this particular top is much greater than this one, okay? And that one is at $1,000. So it's going to go basically from approximately $250 at the bottom to $1,000, which is 300% in a year and a half, and that's a pretty good return. But the whole point of this video is this: our mathematical work allows us to, of course, identify these opportunities that will bottom soon and then go much higher, or top soon and go decline quite substantially. But it also identifies or tells us which stocks to avoid at this point in time, and give them a little bit more time to complete their patterns. And then as we move into, let's say, early 2026, then this stock will become of much greater interest to us, and we'll look for the final target. We'll run the final targeting analysis in order to pinpoint exactly where the bottom is, take the position, and ride it all the way up, hopefully to $1,000. So I think that's it for today. We'll be back with another weekly. I think we're looking at one of the commodities tomorrow, or perhaps we'll look at one of the stocks we already picked over the last couple of weeks, or we traded into over the last couple of weeks. Once again, if you're interested in this kind of work, we do have a free trial. I do encourage people to sign up. It's 30 days free. We don't, there's no strings attached of any kind. We don't ask for a credit card, none of that stuff. So links are there. Click on it, read a little bit more. If you're interested, send us an email. We'll create an account for you, and then you can look at opportunities such as these that nobody else has access to. That's it for today. Thank you very much for your time. We'll be back with another update tomorrow. And of course, don't forget to subscribe. Thank you. Bye-bye.